All right, hello everybody. Welcome back into the NASDAQ Option Superstars program. Wanted to get a video out here this afternoon walking through some of our trading from this week. We've closed out of a handful of winning trades. I want to talk about a couple topics there. We've also opened up a couple of new trades as well. One this afternoon on ATVI. I'll walk through the thought process on that trade. And overall, I just want to give you a glimpse into what I'm seeing on my side. So let's go ahead and jump in. The markets have been super impressive. The last 2-3 weeks, we've seen a pretty impressive recovery, pretty impressive bounce off of the 200-period moving average. Got down and tested that back late August, and it's been a straight shot up to a new all-time high today. The high of the session right around 302.50. That is a new high on SPY. So it's been impressive. The volume hasn't been overly impressive. The internals have not been overly impressive, meaning we have not seen broad-based participation. There's been a couple of key sectors that have led this latest charge to the upside, specifically the financials and the tech names. You've got Apple, Amazon, Citigroup, Bank of America, JP Morgan, Goldman Sachs, just to name a few. They've really led this latest wave to the upside. The reason I bring this up, when you start to see a market make new highs and it's not broad-based participation, a lot of times that move does not have staying power. A lot of times it means we're near the tail end of a move. And I fully expect that to be the case. Now, we're very news driven, continuing that trend. We've got a lot of news out here this week. We've got a lot of news out next week. Today was all about the ECB lowering their rates, going even further into negative territory, introducing another round of QE, propping the markets up. And then we had some headlines out of China again today. And it's amazing that these markets worldwide are so desperate to keep things afloat. It's completely one-directional, completely overbought, and they're so scared of any little downtick. It's been truly amazing to see. Next week, the focus is going to be on the Fed. We've got the Fed meeting, the Fed interest rate statement out next week. That's a big potential market mover, so we'll watch that very closely. I do think a lot of good news is being priced in yet again. You know, this market up at highs, pricing in another Fed rate cut. It's pricing in an assumed agreement with China. If any of those events fail to deliver, it's another situation where we've got a massive amount of room below us for this thing to pull back. Now, if we do see a pullback, where would I be looking for as a first target on the downside? 297.71 is the 8-period EMA. I would love to see that tested. It's that pink line here on my daily chart. That's an area that I'd love to see tested over the next few days. Getting a little bit of selling into the close, nothing significant. I mean, we're still very positive on the session, but well off the highs. We're very tired here. This market is very extended. So the reason I bring all of this up is we continue to focus more on credit spreads right now. It's been the case now for the last number of weeks. We continue to see better performance with those spreads. With this market so indecisive, and I know it sounds funny to say that because the market made a new high today, but what I'm talking about there is without the broad-based participation, with this market so tied to every little news event and every little Trump tweet, the credit spreads allow us to control our risk, and they give us a more forgiving trade. We have taken some different long call and long puts here lately, and the problem with those is if you get caught in any type of head fake, it's difficult. I mean, they can turn south quickly. The credit spreads allow us to survive longer. They recover much faster because the time decay helps us. It adds up in our favor. The volatility contracting, that helps us. And those have been scenarios that we've seen play out in our favor the last few weeks. The credit spreads have done really, really well for us because the time decay has added up so significantly. We haven't had a lot of big directional moves on those stocks, but we don't need them. With the time decay helping us, the volatility contracting, that helping us as well, it just gives us a more forgiving trade. When we start to get the news cycle to settle down a little bit, we can certainly shift our focus back to more aggressive strategies. I just don't see a need to do that as of yet. I'm continuing to pick and choose our spots carefully on those. I do favor the credit spreads here in the near future. So, let's talk about that. I mentioned that they have been performing well for us. We've actually closed out of 6 winning trades here this week on those credit spreads. And you can see those. I'm showing you the position sheet that's updated on the owner site every day as well as in the Slack group. A couple of questions have come in on how we've managed these credit spreads. It was a mix of short call spreads and short put spreads. And the questions that came in, if you take a look at Win, which was closed out here today, for example, Win was stronger earlier this morning. It came off the highs, but still a nice session. We had a put spread on. We sold it for 59 cents. We did that here last week, so it was a really short-term trade for us. We closed it out for 18 cents. It gave us a $123 profit. Why did I close it out? Why did I close a lot of these credit spreads out with partial profits? If I close this thing out for 18 cents today, there was still 18 cents of profit potential on the table. The reason why I like to close credit spreads early, as you start to get closer to expiration, specifically in the last a week to 10 days before expiration, the gamma really starts to increase. And the gamma represents how quickly those options are going to change for every change in the price of the stock. And with the gamma picking up, it means those options are more sensitive to changes in stock price. With a lot of these trades here that we've closed out, a lot of them were closed out around a 75% of max profit level. I have seen trades in the past. If I go back even into early last year, I would hold a lot of trades to expiration, trying to book the entire profit, trying to just let the whole thing expire worthless and not have to pay the commission. And the problem that you run into, you could have a trade like Win, where you approach a 75% of max profit level today. We've got a little bit of time left here. We've got 15 days left to expiration. I have had trades that go from a really nice profit level to a full loss. Because as you start to get closer to expiration, if this stock reverses in the other direction, it's going to be painful quickly. I have found that my results improve considerably when I close out of positions early around that 75% of max profit. You have the option there to hold to expiration. I just don't recommend that you do it. The only time that I would do it is if you get a big directional move in your favor, where both options, in this case on Win, if we had a big move higher, let's say Win is up around 120. Well, that's one thing. Then both options are well out of the money. But because we haven't had a huge move, and on many of these, we haven't had huge directional moves, we made money more from the time decay adding up and from the volatility helping us, the volatility contracting helping us. Well, if we don't get the big directional moves in our favor, it's certainly in our best interest to close out of those trades early, book the partial profit, free up the capital, and move on to the next trade. That's exactly why we've taken action on those here over the last couple of days. And we've had a nice little stretch here. If we scroll back up, we know the month of July into early August, it was difficult. There wasn't a lot to work with in the market, and we've seen volatility start to come to life here, late summer and here into early fall, and that's helped us. You can see it on the results. We've had a whole slew of winning trades here. I fully expect that to continue as long as the markets stay active. If we get back into a one-way market, it's going to be more difficult. So that's why I want the volatility to stay elevated. I want the VIX to stay I want it to get back up and stay in the high teens, low 20s. I've talked about that in the past, how my results improve as volatility expands, and we're seeing a perfect example of that. The credit spreads have really increased in our favor because the options were more expensive, the volatility was higher. That helps us with the credit spread. It helps us stack the deck in our favor. So we'll continue to look for new trades here over the next few days. And, we put on a new credit spread here today. We may look at another one here tomorrow, just depending on what the market does. The trade from today, let me go ahead and pull up a chart of ATVI. So this is Activision Blizzard. This is a stock that I've traded now for the last couple of years on and off. We've already got an existing position on. It expires next week, and that trade is working against us. We have the short the 49.51 call spread on. We want ATVI below 49. Well, it's up above 55. So that trade is most likely, unless we get a huge move lower over the next few trading days, we're going to be closing that trade out for a loss. Okay, sometime between now and early next week. Well, if I take a look at this chart, really nothing has changed here. If I take a look at that pulse indicator down at the bottom, the red, yellow, and green histogram, you can see now that for the last couple of weeks, we've had a whole slew of green bars print. That represents between a 2 and a 3 standard deviation channel move on the upside. In other words, it's very, very overbought here. The chances of this thing making a move higher, pretty slim. It's possible, just not probable. Chances are we're going to see a period of consolidation or even a pullback, and we've started to see that here today. What I typically see is when I start to get one 2, maybe 3 green bars in the pulse indicator, that is a clear signal that we are at an extreme. A very typical pattern going forward is to see a period of sideways movement or a reversal in the other direction. Very unusual to see this many green bars plot right in a row. Very unusual pattern. So we put on the initial trade. That was put on back on August 23rd. It has not worked out for us. But the pattern is still valid. The market is still overbought. And I really like today's price action because we opened higher and sold off pretty much all day long. I love this reversal pattern here. Doesn't mean that this thing is guaranteed to break lower, but we don't need it to. By selling a call spread like we did this afternoon, it does allow us to be in a neutral to bearish position. I would love to see the moving averages broken over the next couple of days. That would be great. That would be very encouraging to see. We'll have to see if that plays out or not. So the whole basis for the trade was the pulse indicator plotting all these green bars here. And this is going to be, for the time being, our second open trade on ATVI. So let me go over to the trade page and let's take a look at this thing. We went out to the October 11 weekly options, the ones with 29 days left. And we came in and we sold the 57.59 call spread. So to do that, all I have to do is come up to the October 11 weeklies, right click on the 57 calls, go to sell, and select vertical. That's going to pop up an order down at the bottom. By default, it loads up the 57.58 call spread. I'm going to click on the drop-down menu of that 58 call and switch it to 59. That way it matches up with what I sent out in the alert earlier. Now, we were looking to get filled in the alert that I sent out earlier. We were looking to get filled at 55 cents or higher. We actually got filled on this thing around 60 cents earlier. It certainly has sold off since then. All right, so it's actually trading for 45 cents mid-price. We collected 60 cents. And let me go ahead and change that price so I can show you the price that we got filled at. And I know a couple of you were at different prices and you posted that into the Slack group. But at 60 cents, what it did for us, the 60 cents or $60 per spread, that's our max profit. That's the most I can make on the position. My max risk is $140 per spread. So I'm right around, I'm just worse than risk 2 to make 1. Very typical for us. It ties up very little capital. You're looking at that saying, is $60, is that really worth it as a max profit potential? Remember, I'm only tying up $140 of capital. You can put this thing on 3 times and still fall inside of our $500 of risk that we track per position on the position sheets. Right? That would all of a sudden increase your profit potential to $180 per spread. So it's still a very reasonable trade. My break-even point's at 57.60. I'm looking for the stock to stay below 57.60. If it does, I get to make money on the position. So up, down, or sideways, I'm okay as long as price action stays below that level. We make money. I make money from time decay adding up. Every day that passes, that helps me. And I make money from volatility decreasing. There's our 5 ways of making money on the position. My initial target, and I put it on the position sheet, my initial target is 15 cents. If I can buy it back for 15 cents, that would give me 75% of my max profit potential. The reason I like this trade, the only move that hurts me is a big move above 57.60. That's about $2 above us. We've got about a $2 cushion where I can be dead wrong and we can still make money. The only move that hurts us is a big move higher, which I'm not expecting, because remember what we talked about on that chart. We're already between a 2 and a 3 standard deviation channel move on the upside. We're very overbought. I love the pattern here. So this would allow us to start battling back. We're going to take a loss, most likely, on the original trade. So if I can start to battle back here, that's what we're looking to do over the next couple of weeks. So that's the position on ATVI. Let me pull up on Tastyworks. Let me show you how to do it there. Once you log into Tastyworks, there's a symbol box up at the top that I am going to type in ATVI. I'm going to select the trade tab on the left-hand side there, that vertical toolbar. Let's click on trade. It's going to show the trade page showing all the expiration cycles for ATVI. I want to go to the October 11 options because that's what it said in the alert. I'm going to click on that little arrow to pop up all of the strike prices that I have available. If you need to pop up more strike prices, in the upper right-hand corner, there is a drop-down menu. If you click on that, you can load up more strikes if needed. So from the alert, we know we want to sell the 57 call. So I'm going to come to the call options on the left-hand side. I'm going to go to the 57 call, and I'm going to left-click on the bid price of the 57 call. And that's going to box it in red. I am then going to left click on the ask price of the 59 call, because in the alert I said I want to sell the 57 call, buy the 59. So I'm going to left click on the ask price of the 59 call. It's going to box it in green, representing a buy order. Down at the bottom in the lower left-hand corner, you can see it summarized. I am selling one 57 call, STO stands for sell to open, and I am buying one 59 call. BTO stands for buy to open. I'm doing this all as one trade. I'm doing it as a vertical spread. I can change the quantity. All I have to do is click on the left and right arrows here as I do. If I bump up the quantity, you'll see it change in the lower left-hand corner. I went from 1 spread to 5 spreads. So you can change the quantity there. You can also change the price. In the middle section, you can either arrow up or down to change the price, or you can just type in whatever price you want to place that order at. This is done as a net credit. Anytime that I say sell to open, that means the trade is a credit spread, and it means it needs to be done as a net credit here inside of Tastyworks. Time and force, this is an entry order. I do want to set it to a day order. The only time I'm going to use a GTC is if it's for a target or a stop. So I'm going to set this to a day order. Click on review and send. It'll bring up an order confirmation box that you can review and then go ahead and send the order off. So that's how we place the trade in Tastyworks. So that order it did get filled. I know a lot of you got filled this afternoon, which is great. Got filled before we got that little sell-off into the close, which is nice. If you did not get filled on the position, you can still grab it tomorrow. Just make sure you get filled at 55 cents or higher. That is the price that we posted inside of the alert. So if we get any type of a higher open tomorrow on ATVI, you should still be able to grab the trade. If you have any questions on this new setup from this afternoon or any of the trades that we've closed out here this week, feel free to post a comment inside of the Slack group, inside of the NetPicks app, or you can email me directly, mike@netpicks.com. So I'm going to wrap this video up here. Enjoy your afternoon, everybody, and I'll be back with you here tomorrow as we wrap up the week and hopefully get 1, maybe 2 new trades on here tomorrow. All right, so enjoy your evening, everybody. I'll talk to you here on Friday.